You are watching today's video technical update presented by FXTimes. It is Thursday, May 27th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex markets. The markets are showing some more volatility the second half of the week, although the moves are still within an overall correction or consolidation period. Let's take a look at the euro dollar, which was supported above the previous 4-year low of 1.2150. The dollar Swiss franc had a surprise pop, but was followed by an even sharper reversal, suggesting a top has formed. Finally, the pound yen and the Aussie dollar pair rallied, somewhat reflecting the improved risk appetite today. This video is being produced at about 2:50 p.m. Eastern Time ahead of today's US session close. Here's a look at the daily time frame, and we've seen this the last few times. We have this swing projection. It's still valid, but timing may, but it's not confirmed because the market is still above 1.2150. We saw this is an important level to break, and yesterday we had a test of that level. You had to be patient and wait until this support breaks. In the 4-hour time frame, we see that the market, didn't quite have a strong test of this level. We had rejection, we had this reversal combination and candlestick action, and the market now is resuming its overall consolidation. So there's some strength here in the euro as it breaks above our 50 moving average. It's approaching this 1.2440, which is the 61.8% retracement of this decline. So that's where I initially when this market was rallying here at 1.2250, I projected this to go to the 61.8%, and the market had to make a double bottom and now is heading back up. Now the market can break this 1.2440, although this is an important resistance area, and if it breaks that, it's likely to test this previous high here around 1.26. Okay, so in the daily, you see, if the market continues rallying, we might see the market test 1.26. The next one after that is about 1.30, 1.29 area. So this is a significant correction. So as far as time goes, you should anticipate some further correction. And as far as the swing, the retracement, there's a possibility first to reach the 1.2440, and if that breaks, the market can come up here to this 61.8% retracement. So this is a 61.8 retracement of a larger scale, which goes all the way up to 1.31. I'll be a little conservative and see look for some topping action even before that. But looking at the 4-hour time frame, you see that first we will test this previous high, 1.26, and then if that breaks, then we could go up to 1.30 area. Okay, so that's the euro dollar, still in consolidation. There's some euro strength as we are unable to break this low at 1.2150. If we zoom out a little more, we see that we have broken this previous low, but this is not a sustained break yet. This could still be a clear out for the market to rebound. So pay very close attention to the price action in the upcoming week to see if there's a breakout of this consolidation. The dollar Swiss franc had a very strong move today. Here you see in the 1-hour time frame after the market tested this 200 moving average. We see this strong rejection. These were very sharp rally bullish candlesticks. Went all the way up here 150 pips, hit the 1.1650, and then an even sharper decline here. 2 candlesticks that covered up that paired more than 100% of this rally. So very strange move, but it is still within consolidation. If we zoom out and look at the higher time frames, here initially looked like this was a false topping action that's happening here. You see, zoom out, we'll take a look at the 4-hour time frame actually here right now. we saw this topping action possibly, and then we saw today the spike that could have resumed this trend. There's sort of a 50, in the 4-hour time frame, the 50 moving average is the same as the 200 moving average in the 1-hour time frame. They differ by a factor of 4. So here in the 4-hour time frame, this 50 moving average, there was definitely a 50 moving average club, as you saw this market respect the average every time it tested it or came near it. So here, a possible explanation is that a lot of people, the dollar Swiss franc was very hot, very bullish, and you saw the gap between the moving averages widen. So this is a very bullish pair, and not everyone saw this as topping action. Although now that the market rejected this spike, we can have more confidence that this is indeed topping action. But we still need some further confirmation. For example, in the 4-hour time frame, some traders try to get in the sort of like a middle pivot of this topping action. Another approach for a more conservative trader would be to wait until a clear break of this level, which is about, let's see, 1.1450. So this is 1.1450, very important power line. You see this is resistance here and tested as support here, rejected it. And if the market can break below that and then withstand some kind of pullback that doesn't break above the middle of this consolidation, then we could have a swing towards the 200 moving average, towards this consolidation area. Although the 1.1240 1250 area is also a minor low, so watch for some support here, but also anticipate further decline towards 1.10 as it tests this 50% retracement consolidation zone and the 200 moving average in the 4-hour time frame. Also in the daily, we see that here we may be seeing a resistance. Okay, and I'm going to just pop in the weekly real quick. As you see here, we approached this 78.6% and this power line, so we didn't hit it yet, but we may be topping even before that, and we see our RSI finally turning a little bit and slowing down. So maybe if you're aggressive, you're too late anyway, and if you're conservative, you want to wait for a break and a pullback. I'm going to quickly go over the Aussie dollar and pound yen pairs as they are similar in this correction. We saw this break of let's go to the daily actually. So very sharp decline the last few weeks, and then we had this consolidation, we had these rejections hinting that this could be a bottom, and then today's action definitely confirmed that this is a bottom, which means that we can anticipate this rally towards maybe 38.2, 50% retracement, which is this previous support zone. So this offers us a pullback to see if we would still be in the declining mode. We could basically go into consolidation for a while now. But yes, this is a test to see if the market has abandoned this top and is working with a lower zone, or maybe even a continuation, bearish continuation. Okay, so look for more clues. Right now, I really can't say where this market is going. Just stalking it. Aussie, in the 4-hour time frame we saw here yesterday, anticipated a decline. Actually, further down we had this reversal, but price action here completely reversed that situation. That scenario became invalid, and now this continuing rally could go to this zone, and this could be a B C kind of zigzag pattern correction, which is still within which means that after that, if the market continues to decline, then we have another impulse wave, bearish impulse wave. But if it breaks back into this consolidation, then we really have to adjust our outlook and anticipate more of a wide range kind of action instead of trending. Alright, so that's Aussie dollar. Okay, so not much time to talk about the pound yen today. You can read more about it on FXTimes.com. I just wanted to mention this triangle X and now further correction is panning out. Actually reached equality and can continue maybe 150% or up to 161.8% of this wave. Looking at the 4-hour time frame, that means this market can come up to this next level at 134.50. So that's the target at the moment. But first, this pair may have to deal with this overbought condition and resolve a minor cycle high before continuing higher. And that's all for today. Visit FXTimes.com for more analysis updates and live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you good trading.